Good day to everyone. I'm here to discuss certain case studies that I have picked in GST so that we can apply whatever that we have learned in academics and see how the business and taxpayers deal with those issues. And I will be dealing in areas of valuation, areas of mixed or composite supplies, and supplies by an intermediary, how a particular service under the garb of business support service becomes is actually an intermediary service. And then a certain aspect of works contract service, which many people might not have thought about interpreting particular aspect of works contract service in such a manner. And then taxability of activities conducted by a trust, in what way or to what extent a charitable activity conducted by a trust is taxable under the GST law. Mind you, charitable activity is a defined word, and unless that defined word is satisfied, it becomes a taxable supply by a trust. And one particular issue and under input tax credit. Now, all these cases have been taken from the advanced ruling, section 97, subsection 2 of the GST Act. And these are all certain conditions have to be fulfilled, or certain scenarios have to exist for a person to approach the advanced ruling, so that he can get a judgment from the authorities about a particular transaction. And this judgment is only applicable for the taxpayer himself who has applied, and the jurisdictional officer alone. Therefore, it is only a binding on only these two parties. It is not binding for anyone else. But still, people refer these cases because it has a persuasive effect on how the law and the legislature would get interpreted in the future when it comes to litigation. So one can approach the advanced ruling authorities for getting clarifications on how to classify any goods or services, about whether the goods or services can fall under a particular heading, say 9952, or another heading, say 9954, how to classify those goods or those services, and applicability of a notification issued under the provisions of the Act. So if you see what are the one can approach the advanced ruling authorities, to seek clarification on whether a particular notification would be applicable to such a registered person, or whether the the applicability date of the notification, what would be the date after which the notification would be applicable to business people. All those issues are dealt under clause B. In determination of time and value of supply of goods or services, or both, time of supply determines the liability, or the point at which the liability arises. Value of supply provides the rules for valuation of a particular supply, and all these issues are dealt under clause C. As far as clause D is concerned, admissibility of input tax credit 1617 sections along with 49. All the 17.5 is very much important, and those people would always continuously have issues under section 17 when it comes to GST. The determination of the liability to pay tax on any goods or services, or both, whether the applicant is required to be registered, because this registration is still a big issue under GST, because people are still not exactly aware of when to get registered, what is the threshold limit, because threshold limit keeps on changing, and it depends on the supply that they are providing. So such issues are good. If anyone has any doubt on the registration, they can very well approach the ruling authorities and pay the required fees, or file the required prescribed form, and get it clarified from the authority themselves. Whether any particular thing done by the applicant with respect to any goods or services, or both, which would amount to or result in a supply of goods or services. Here, in any activity done by a particular person, whether it would construe or it would fall under the ambit of supply defined in section 7, that itself would be a question. That is the basic criteria for a transaction to fall under the GST Act, that it should be a supply. So those things, Schedule 3 specifically says all those things that would not be treated as supply of goods nor services, but that would be there if there are items or transactions that would not be regarded as supply, then if anyone would want to clarify, get it clarified beforehand, he can go and approach the Advanced Ruling Authority under Section 97(2)(g) and get it clarified from the authorities. If you see, look at the valuation. This is a case of Chhattisgarh Advanced Ruling Authorities, where the applicant is a transporter. He's a transporter of cement or clinkers, and he supplies in his local area. He has a niche of clients, and one of his clients has proposed that while transporting his cement or clinkers, the client himself would provide diesel. Therefore, it is usually the applicant provides the vehicle along with the diesel, and he transports the cement. But in this case, the client said that he would be providing the diesel as well. So here the applicant charged freight or transportation charges as the consideration for the services. Now the question that has been asked is whether GST on freight would it include the diesel cost or not. That is, had the GST, had diesel been supplied by the by the applicant himself, it would naturally fall and sit under the freight cost itself. But now the freight cost is now reduced to the amount of diesel which has been provided by the client. Now the question is how to value such a transaction. So issues dealt by the advanced ruling authorities are the definition of supply. But supply, I just read it out to you. All forms of supply of goods or services of both, which are agreed to be made for a consideration or made for a consideration by a person in the course or furtherance of business. This would definitely fall into the definition of supply, because there is a consideration. The supply is of services relating to transportation of cement or clinkers. Hence, it is a service supply as such. And now, valuation of supply, section 15(2)(b). This section specifically points out the rules for valuation, which definitely has to be read with valuation rules. But it specifically says that any amount that the supplier is liable to pay in relation to such supply, but which has been incurred by the recipient of the supply and not included in the price of the goods or services, shall be added back to the value charged by the supplier. In this case, the supplier has not charged the diesel cost. Therefore, the value of the supply is being reduced. The cost of diesel is borne by the recipient. Hence, here the value of supply itself is totally reduced. Therefore, the revenue is losing on the tax portion. Therefore, the revenue's idea is to add back the fuel cost and then get the proper value of the supply, apply the GST rates, then pay it to the government. And so this provision is to ensure that the supply of services is equitable, and it is not reduced on account of a barter type of transaction made by the supplier and the recipient. And now they have also dealt with the definition of consideration for any payments made in respect of or for inducement of supply of goods or services of both, except any subsidy given by the central or state government. Definitely there is a consideration, there is valuation. Therefore, they have said that the applicant is required to charge GST on the total amount, including the cost of diesel. Therefore, the cost of diesel has to be included in the value of supply provided by the applicant to the client. And therefore, the issue would happen is that the client now would have to issue an invoice for providing the fuel to the supplier. So that is the practical aspect that has to be taken care of by the client. Another issue that came up recently is that of Britannia advanced ruling authorities, that they are engaged in naturally everyone will be knowing it. They are engaged in FMCG products, and they offer certain products as free along with the supply of the main product. For what they have sought ruling for is whether the promotional products would qualify to be a supply liable to GST, and even if it is supply liable to GST, whether it would fall within the mischief of a mixed supply. So for mixed supply means section 8 of CGST says that if it is a mixed supply, then the highest then the product attracting the highest rate would be applicable to all the supplies of that category. Therefore, they would want to know whether it is a mixed supply or a composite supply, or if it is free means how to treat it. So, but they had withdrawn their application because on 7th March 19, the CBIC had issued a circular, the same subject, fortunately, and they have withdrawn that application. Now let us look at what the circular says. Circular says that 7(1)(a), the expression supply includes all forms of supply of goods or services of both, such as sale, transfer, barter, exchange, license, rental, lease, provided in the course of furtherance of business. As long as it is for the business, it involves all sorts of supplies. That is the crux of the definition of section 7(1)(a). The goods or services both which are supplied free of cost shall not be treated as supply under the GST Act because it is not being made with any consideration. If you go back to 7(1)(a), it says supply agreed to be made for a consideration. Therefore, there is no consideration involved in a free supply, free sample which has been distributed along with the main product. Therefore, one therefore, there is no GST that has to be charged. There is no valuation that will be applicable for the free product. So that aspect gets cleared out. However, the section 17(5) 17(5) speaks of block credits and the related rules, related provisions, and it says that ITC shall not be applicable in respect of goods stolen, goods destroyed, goods written off, or disposed of by way of gift or free samples. Here, about gift or free samples are included. Hence, you may have to reverse the input tax credit that you have already obtained, that you have waived on account of production or on account of purchase of that second supply which is being offered free to your recipients. So the circular is quite clear as to how the treatment of free supplies, free samples have to be made. And as far as then it also deals with other issues with respect to buy one get one free offer, where it says that buy one get one free is a type of supply where two products are supplied for a single price, and the same logic of free samples would not apply. It seems logic of free samples would not apply, and hence one has to the one has to pay GST together for both. That is one point. And as far as ITC is concerned, there will not be any reversal of it. That is the second point. As far as discounts, including buy more, save more offer, as far as discounts are concerned, there are specific provisions are there in the Act, which the circular has reiterated that discounts, when it comes to discounts, it shall be reduced from the consideration, it shall be reduced from the value that is being charged to the recipient. So long as section 15(3) is satisfied, one is allowed to reduce the discount value from the consideration. Section 15(3) of the CGST Act speaks of the allowability of discounts being reduced from the value only when such discounts are established at the time of supply or are recorded before the time of supply. Therefore, the criteria of discount should be available at the time of supply for it to be reduced. That is one of the major conditions. And as far as the next point that the circular speaks of is about secondary discounts. Secondary discounts are those discounts where the time of supply is over, supply is completed, but then after the supply, one comes to know that the valuation of that product is not correct. Therefore, that results in a secondary discount, and how people would have to deal with such cases is through issue of credit notes and debit notes, where they would increase or reduce the value of the already issued products. These are the discussions that have been dealt by the circular wide number 92/11/2019, issued by 7th March 2019, pursuant to which the application by Britannia to the advanced ruling authorities was withdrawn. So next case that we speak of, or that we discuss about, is that of VServe Global. It's a Maharashtra state advanced authorities for advanced ruling, where the facts of the case is that the applicant is engaged in providing back office support services. That is what the applicant claims. If we look at the services provided by a back office support, service that the applicant is looking after. It involves liaison with inspection authorities, providing forwarder or carrier information to supplier, getting draft bill of lading, and following up for payments, following up for goods. So here the client finalizes the purchaser and the purchaser or the seller, and the for on behalf of the client, the applicant does almost all of the activities. In fact, I would even say that he does that of a C&F agent as well. So not only providing these services, he also provides accounting services as well to his clients. Therefore, the applicant was of the opinion that it is a composite supply where the principal supply is accounting services or is back office services, and therefore, as whether the above services would qualify as intermediary services and whether it would be construed as a composite supply. That is the question that the applicant has sought towards to the advanced authority for advanced ruling, and what they have concluded is that the services provided by the applicant are beyond the scope of back office work, because back office work, whatever that he is doing, is not really a back office work, because at the end he would fall under the definition of intermediary. Because if you look at the definition of intermediary given in section 2 subsequent 13, it's saying that intermediary is one who arranges or facilitates supply of goods or services or both. Here, the authorities have said that this applicant is in the business of facilitating the supply of goods or services or both. This is important. He is facilitating the supply of goods or services or both because he is liaising with the inspection authorities. He is providing forwarder carrier information to the supplier. He is getting draft bill of lading. He is following up for payments. For it becomes like a facilitation for the supply of goods or services from this country to another country, and he is also not providing goods or services or both on his own account. So this is the second condition that he has satisfied. So, and also what the authorities have taken is that they have relied on the taxation of services and education guide issued in 2012 for service tax to establish the services provided by the applicant were a composite service with intermediary services being the principal supply. So it has to be highlighted that they have taken a stand. Yes, it is a composite service, but yes, it is a composite service with intermediary being the principal supply. So when intermediary becomes the principal supply, then then they have concluded that accounting services are not the principal services that the client is providing. Further, they have also gone on to conclude that that it is not a zero rated supply, because the client, the applicant was of the opinion that he could consider these services as a zero rated because one of his clients was located abroad, basically, because he was providing back office support services to overseas companies. So when his supply has been considered as an intermediary supply, then the POPS, that is place of supply, becomes, in case of intermediary, is where the intermediary is located, which becomes India, which means it becomes a taxable service. Straight from export of services, now it is a highly taxable service now. So they have concluded that whatever the client is providing or whatever the applicant is providing is an intermediary services. Now this is a case of Tata Projects, where the contract was awarded to the Tata Projects by Nuclear Fuel Complex for the construction of plant and non-plant buildings along with other allied structures. So they were supposed to carry out construction works of original work in nature for plant and non-plant buildings, and so definitely it did fall under subsection 119 of section 2 of the GST Act, which defines what a works contract is. But they are saying that now the question is what would be the rate applicable to this project, because they have taken a stand that this nuclear fuel complex is an arm of the government. Therefore, the same shall fall under the ambit of civil structure meant for use other than commerce, industry, or any other business or profession. So with this interpretation, they had sought or they were of the opinion that the rate charged shall be at 12%. What the authorities have ruled is that the supply falls under the ambit of works contract defined in section 2119, being a contract for building, construction, fabrication, alteration or commissioning of any immovable property, wherein the transfer of property in goods, whether as goods or in some other form, is involved in the execution of such contract. But basically, they are satisfied that the contract is for the construction of an immovable property, and hence it shall fall under the definition of works contract. However, the rate for works contract services is specified in notification number 11/2017, that is the base notification for all the rate amendments being done. And serial number 3 is that of construction related activities, works contract related activities to be more precise. And 36A speaks of construction of civil structure or any other original works meant predominantly for use other than commerce, industry, or any other business or profession. Because any layman would have thought that uh, nuclear fuel complex would definitely be for purpose other than for commerce, industry, or any other business or profession, and the rate would have naturally been 6 and 6 plus 6%, 12%. However, the learned AR interpreted that the activities at NFC may very well fall under the definition of business. This is the new twist given by the ruling authorities, that the activities of the client may be construed as business as such, even though they may be a part of the government, because they are engaged in the manufacture and enrichment of fuel. This would lead to production and distribution of electricity, resulting it into a commercial activity. So they have gone on to interpret the businesses of the client, and then they have said that it would constitute a business as such, and hence they have gone on to classify it under residual entry 312 of 11/2017, and the rate would be 18% then. So that is the change in the stand that the AAR has taken for this post contract case, where they have gone on to interpret, or they've gone on to define what would the clients be doing, whether that would be business or not. If it is business, then I'm sorry, it cannot be used. It cannot be for the purpose of other than commerce, industry, or any other business or profession. This is another interesting case law, where taxability of activities carried out by a trust. The applicant is a 12AA registered trust under the Income Tax Act, and its objects include healthcare, rural development, women empowerment, education facility, etc. Those are the general objects of any charitable trust, and they were also eligible for their donations were also exempt under the ATG. So it is a purely charitable organization, and it organizes a regular marathon event, which is a fundraising event, and the funds were used to provide prosthetic legs to its, to the people who are suffering with such an impairment. So the event was conducted to raise funds so that the funds can be used for prosthetic legs, but towards procuring prosthetic legs for physically handicapped people. Now, what the question was is whether the conduct of marathon events is an exempt event in GST. That is one important question that the applicant has raised, and whether a charitable trust under section 12AA would automatically entitle a trust to be a charitable trust with GST Act. That is another question. The applicant is questioning whether there would be auto applicability of a charitable trust from Income Tax Act to the GST Act. Then if no, then would registration be required for a trust? And then would donations received for this marathon, would it even be subjected to GST? So ruling by the AAR, the money collected by the applicant is meant for organizing the marathon event. So what the AAR has resolved is that the event that is being conducted is not for for prosthetic legs, but it is for organizing the marathon event and used for paying the registration partners, event management charges, prize money, and payment gateways. All those charges are bone are deducted, and whatever the leftover is given for prosthetics. Therefore, the color of this activity itself changes from a charitable to a marathon organizing event or an event organizing supply. Therefore, GST, they have concluded that would be applicable on the money collected from the participants for the conduct of the marathon. Hence, conduct of marathon is not an exempt supply. They are saying that the of marathon is not an exempt supply. But marathon activities by a charitable trust would definitely attract GST. This is one definitive judgment being received. Therefore, we can expect good amount of litigations in the future in this areas. And so they are also even concluding that the money collected from the participants would also involve GST, which means they would have to collect GST from the participants and pay it to the government, and whatever that is remaining after paying to all these, after bearing all these charges, then the remaining amount would be used for prosthetic legs. That is what they are mentioned, that is what they are meaning. And now the next question that was asked by the applicant was whether if a trust is charitable under section 12AA, would it also mean a charitable trust under the GST Act? The answer is clearly no. Charitable under the Income Tax Act, it is a very huge definition, but as far as GST Act is concerned, notification number 12/17, that is the rate for services, means that is the exemption notification that provides, says that defines what is charitable activities are concerned, and it says that charitable activities means activities relating to public health by way of care or counseling of terminally ill persons, persons affected with HIV or AIDS, persons addicted to a dependence forming substance, public awareness of preventive health, family planning, or advancement of religious spirituality or yoga, or providing educational programs to a certain class of people, preservation of environment, including watershed, forest, and wildlife. So these are the 4 to 5 areas that fall under the meaning of charitable activities, and so far as these conditions are satisfied, there will be de facto applicability of charitable trust definition. Not, the trust would have to, be subject to GST, and registration would be definitely be required, because in this case the collections from the marathon event exceeded the basic threshold limit of 20 lakhs during that time, so they would have to take registration, and the money, so this is the money collected would obviously attract GST. That is the judgment given by the ruling, stating very clearly and categorically that even charitable activities would be under the ambit of GST if the activities does not fall under the definition of charitable trust. Charitable activities given under notification number 12/17, that is point number 1, and hence registration would automatically be required if their donations exceed the limit prescribed under the Act, and donations received from participants for marathon would definitely attract GST. That is the next ruling that they have given. And this is the last case that I have planned to discuss today about input tax credit of Indian Oil Corporation. This is a very interesting scenario, because as far as non-taxable supplies are concerned, we have only a few areas where non-taxable supplies are covered. One such being the aviation turbine fuel and petroleum products. Supply of petroleum and aviation turbine fuels are non-taxable in nature, because they are excluded from the definition of supply itself, from the charge of supply. So they are not taxable as such. And what the applicant does is that he has a refinery at Haldia port at West Bengal, and he has one of his clients at Nepal. So he is transporting the refined petroleum and other products from his Haldia port to the export warehouse at Bihar, Raxol, Bihar. So when he is transporting, he pays railway freight, which is including GST. So the basic question is whether he is eligible to take credit of the GST paid or railway freight for transportation from West Bengal to Bihar. Why? Because this question is appearing because he is under the opinion that all this transportation that he is doing is for purpose of exports, because from Bihar he is exporting to Nepal. So the goods have to move from West Bengal to Bihar and then to Nepal. Therefore, this Bihar warehouse is a transit warehouse, is his opinion. So the applicant also supported his opinion based on the procedures for export warehousing, where the final AR1 form is given by Bihar. So they are saying that it is only a process of export where he is procuring from some other depot, stocking it here and then giving it to Nepal. Therefore, it becomes a zero rated supply. Therefore, this being a zero rated supply, even the transport charges borne for the zero rated supply from Haldia to Bihar would would be eligible for an input tax credit, because section 16.3, I think, I'm not able to recollect, that which deals with the export of goods or services under the IGST Act, says very clearly that input tax credit is allowed for export of goods or services even if it is an exempt supply. So this is the crux that the applicant has laid upon to take credit of railway freight, GST paid on railway freight. And he is also saying that the Rexall warehouse is only a distinct person for the limited purpose of the GST Act, and submitted that the movement of goods from Haldia refinery to its Rexall warehouse is only for the purpose of exportation to Nepal, not for home consumption. The question is whether or not GST paid on railway freight for transportation of petroleum products from its Haldia refinery to its export warehouse at Rexall can be availed as input tax credit. Let us look at the ruling. What they have sought, what they have opined, is that removal from Haldia ports to Rexall does not amount to exports, as there are possibilities of home consumption from Rexall warehouse as well. So what they have said is that it is only a stock transfer from one depot to another depot. So they are saying that the Bihar state is only filing the exports, the Bihar's export forms. The Bihar state has only shown in its GST returns that it does the export, and not the West Bengal state in its GST returns. So it cannot be an export related process at all. Hence, transfer of ATF and other products is a non-taxable supply, not a zero-rated supply. So they have concluded that it becomes a non-taxable exempt supply, and input tax on exempt supplies are not allowed. However, input tax on exempt supplies being zero-rated supplies are allowed. 16.2, correct. Now I'm recollecting. 16.2 says that zero-rated supplies, input tax on zero-rated supplies, notwithstanding that being exempt supplies, shall be the input tax credit shall be allowed on such supplies. Hence, they have concluded that it is a non-taxable supply. For being a non-taxable supply, any input tax credit on such non-taxable supply would not be applicable. And even 17.2 of the CGST Act also says the same. So applicants cannot claim credit of the GST paid on railway freight for transportation of ATF and other non-taxable supplies from West Bengal to the Bihar unit. So thank you. This is for today. For any queries, you may please write to revnb1994@gmail.com. Looking forward to host further sessions on GST. Thank you.